You open your favorite social media app and scroll past a post. This coin just did 10x overnight. A few swipes later, someone else says they quit their job after investing in AI tokens. Everyone's making money. Everyone's winning. And suddenly, you start wondering, is it too late for me to start? The truth? It's not too late. But if you're stepping into crypto for the first time in 2025, there's a lot more you need to know than just how to buy your first token. Because the crypto world isn't the same as it was 5 years ago. It's evolved. It's faster, smarter, more regulated, and filled with both opportunity and risk. So if you're new here, welcome. But before you dive in, let's break down exactly what every new crypto investor needs to understand in 2025 to survive and thrive. First things first, crypto is not a get-rich-quick scheme. That's the #1 myth that brings in millions of new investors and wipes out their savings just as quickly. Yes, there are life-changing gains, but there are also sudden crashes, scams, and projects that disappear overnight. In 2025, the market is more mature, but the volatility hasn't gone away. Bitcoin can still swing thousands of dollars in a day. Small-cap coins can skyrocket or collapse in hours. And while that makes for exciting headlines, it's also where new investors get wrecked. So here's rule #1. Don't invest money you can't afford to lose. Now let's talk about research. In the stock market, you might analyze company earnings, growth forecasts, or dividends. In crypto, you're looking at tokenomics, roadmaps, use cases, development teams, and community strength. It's a different game, and if you don't understand what you're buying, you're not investing. You're gambling. Start with Bitcoin and Ethereum. They're the most established assets, with real infrastructure and use cases. Bitcoin is a store of value. Ethereum powers smart contracts and the broader Web3 ecosystem. Once you're comfortable with those, branch out slowly. Look into AI tokens, real-world asset coins, gaming protocols, or Layer 2 networks. But whatever you do, read the white paper, study the team, and understand the utility of the token. If it doesn't solve a real problem, it won't survive the next bear market. And speaking of survival, let's talk about scams. In 2025, crypto scams are more sophisticated than ever. They don't just promise 100x gains anymore. Some look like real projects, slick websites, verified social accounts, paid influencers. You need to be skeptical of everything. Double-check URLs. Never click random airdrop links. Don't share your wallet seed phrase, ever. If someone promises guaranteed returns, that's a red flag. If it sounds too good to be true, it is. Security matters. Use hardware wallets for long-term storage. Turn on two-factor authentication. Use unique passwords. And stay away from exchanges that aren't regulated. That brings us to another point, regulation. In 2025, global crypto regulation is tightening. And that's not a bad thing. It means more investor protection, more stable platforms, and fewer exit scams. But it also means you need to know where you're trading and what the rules are. Stick to licensed exchanges in your country. Platforms like Coinbase, Kraken, Gemini, or Binance with proper oversight. Because if an offshore platform disappears tomorrow, you're not getting your money back. Now let's cover one of the biggest traps new investors fall into, FOMO, fear of missing out. You see a coin pumping on Twitter. Everyone's talking about it. It's up 300% in a week. Your brain screams, buy now. Pause. Most people who buy at the top end up being the exit liquidity for early investors. Don't chase green candles. Don't invest based on hype. Always ask yourself, would I buy this token today if it were still flat? If the answer is no, you're chasing a pump, not making a smart investment. Next up, understand your strategy. Are you a long-term investor or a short-term trader? Most beginners start off trading, thinking they can flip coins for quick profits. But without a strategy, trading is just gambling. You need a plan, entry points, exit targets, risk limits. If you're not ready for that, stick to long-term investing. Dollar cost average in a solid projects. Hold through the noise. Rebalance your portfolio over time. That brings us to another core principle, diversification. Don't put all your money into one coin, even if it feels like a sure bet. In crypto, anything can happen. Platforms can get hacked. Devs can abandon projects. Regulations can shift. Spread your risk. A balanced portfolio with Bitcoin, Ethereum, and a handful of promising altcoins is far safer than betting everything on one moonshot. But don't over-diversify either. Owning 50 different coins you can't even track won't help you build wealth. Quality beats quantity. Now, let's talk about the importance of patience. Everyone wants to get rich quick, but in reality, the biggest gains often come from staying in the market, not timing it. The people who held Bitcoin through the 2017 crash, the 2020 crash, and the FTX collapse, they're the ones who are thriving now. Zoom out. Ignore the daily noise. Focus on the fundamentals. Build conviction and let time do the work. One more thing. Know the trends. In 2025, the crypto space is more than just currencies. It's decentralized finance. It's tokenized assets. It's blockchain AI. It's gaming, identity, supply chains, insurance, and beyond. You don't need to master every niche, but you should know what's driving innovation. Subscribe to newsletters. Follow crypto educators. Watch market cycles. The more you understand the landscape, the more confident your decisions will be. And remember this, the crypto market is still young. Mistakes will happen. You'll buy into projects that flop. You'll miss some pumps. You might even panic sell during a dip. That's okay. The key is to keep learning. Journal your trades. Reflect on your wins and losses. Read more. Study more. Talk to other investors. Stay engaged but not addicted. And most importantly, protect your mental health. The constant price swings. The social media hype. The regret of missing out. It's easy to burn out or feel overwhelmed. Take breaks. Go outside. Remember that life exists beyond your portfolio. Crypto should be part of your journey, not your entire identity. So, to recap, don't invest more than you can afford to lose. Do your research before buying any token. Use secure wallets and exchanges. Avoid hype and FOMO-driven decisions. Know your strategy, invest or trade. Diversify but not blindly. Stay patient. Learn from your mistakes. Follow trends and market cycles. Take care of your mental health. Crypto is one of the greatest financial opportunities of our generation, but only if you approach it with discipline, awareness, and long-term thinking. The next bull run will make headlines, but the smart investors, they're already positioning themselves today. So take your time. Educate yourself. Build slowly. Because in 2025, the biggest crypto winners aren't the loudest. They're the most prepared. And now, you're one step closer to being one of them.